Have you ever watched the news, heard all the buzz about the stock market, and wondered what it's all about? Or maybe you've thought about investing but don't know where to start. Of course, with all those numbers, charts, and jargon, it's just enough to make anyone's head spin. But today, you're in the right place for the answers. In this video, we're talking about the mysteries of the stock market, debunk some common myths, and give you the tools you need to start your investment journey. Even if you're a complete beginner or just looking to brush up on your knowledge, we've got you covered. And before we get started, if you're new here, make sure you subscribe and hit that bell icon so you don't miss out on our next videos. Stocks, shares, equities. They go by many names. You've heard the terms, maybe even dabbled a bit. But they all mean the same thing. And what's that? Well, imagine you're at a party and someone offers you a slice of cake. That slice of cake is a part of the whole, right? In the same way, when you buy a stock, you're buying a piece of a company. You become a part owner or a shareholder of that company. Cool, huh? Now, why would a company want to sell parts of itself? Good question. Companies issue stocks to raise money. They might want to invest in new projects, expand their operations, or maybe pay off debt. And in return for your investment, you get a share in the company's future profits. Now, all these stocks are bought and sold in a place called the stock market. Think of it as a big, very busy marketplace. But instead of buying and selling fruits or vegetables, people are trading stocks. And just like in a marketplace, prices in the stock market can fluctuate based on supply and demand. If a lot of people want to buy a particular stock, its price will go up. And if a lot of people want to sell, the price will go down. Here, things get a bit interesting. As a shareholder, you have the potential to make money in two ways. First, through capital gains. This is when you sell a stock for more than you bought it for. Buy low, sell high, right? The second way is through dividends. These are a portion of the company's profits that are distributed to shareholders. The stock markets can be physical locations, like the New York Stock Exchange, or virtual markets like NASDAQ. And when you hear terms like bull market or bear market, don't worry, there are no actual animals involved. A bull market means prices are rising, while a bear market means prices are falling. Simple, right? Okay, so this all sounds great, but you might be having thoughts like, I'm not ready yet. I'll start investing when I'm older or when I have more money. Well, let us just stop you right there. The first reason you should care is because stocks have the power to generate wealth and lots of it. They are one of the key ways the rich keep getting richer. Don't worry, this isn't a club exclusive to the wealthy. Anyone can join, and that includes you. Now, the best time to start investing is now. Yes, now. Not tomorrow, not next year, but now. Why? 2 words, compound interest. It's like a snowball rolling down a hill. It starts small, but as it rolls down, it picks up more snow and gets bigger and bigger. The same thing happens with your money when you invest. The returns you earn are reinvested and they earn returns of their own. And the longer you leave your money invested, the bigger your snowball gets. That's the power of compounding. As for age, well, let's just say the stock market doesn't check ID. Whether you're 18 or 80, it's never too early or too late to start. Some of you might be thinking about the risks. Isn't investing in stocks like gambling? Well, not quite. Yes, investing involves risks, but it's not the same as betting your money on a roll of the dice. When you invest, you're putting your money in real businesses. And if you've done your homework right, these are businesses you believe will grow over time. So, while there are no guarantees, investing is about making good decisions, not just taking chances. Now that you're ready to start. As a beginner, your first step is to open a brokerage account. Think of this as your gateway to the stock market, allowing you to buy and sell stocks. There are plenty of online brokers to choose from, each with their own pros and cons. Some offer educational resources for beginners. Others offer advanced trading tools for the pros. Once you've set up your brokerage account, it's time to fund it. This is where you deposit the money you'll use to buy stocks. The first pro tip is to start with what you can afford to lose. Investing should never be a financial strain. Now comes the exciting part, buying your first stock. But how do you choose? That's where the art and science of stock picking comes into play. There are 2 main strategies investors use to pick stocks. fundamental analysis and technical analysis. Fundamental analysis is like being a detective. It involves digging into a company's financials and understanding its business. You'll look at things like the company's earnings, its debt levels, and its profit margins. You'll also consider the company's competitive position in its industry and its growth prospects. The goal is to determine whether the company is financially healthy and whether its stock is priced fairly. On the other hand, technical analysis is more like being a weather forecaster. Instead of looking at a company's fundamentals, you're studying patterns in its stock price. You'll use charts and indicators to predict where the price might go in the future. The idea here is that certain patterns can signal whether a stock is likely to go up or down. Now, which strategy is better? Well, the answer is, it depends. Some investors swear by fundamental analysis, while others are staunch advocates of technical analysis. Many use a combination of both. You have to find a strategy that fits your investment goals, your risk tolerance, and your personal style. Picking stocks isn't just about analyzing numbers or studying charts. You have to understand the trends. Is the company in a growing industry? Does it have innovative products or services? Is it well-positioned to take advantage of future trends? Don't just rely on tips or recommendations. Always do your own research. The more you understand about the companies you invest in, the better your decisions will be. As a beginner, with money in hand. A good place to start is with companies you know and the products you use. Are you a tech geek who loves everything Apple? Maybe consider buying Apple stock. Are you a coffee addict who can't start their day without Starbucks? Perhaps Starbucks stock is the one for you. The key is to invest in companies you believe in. Moving on, let's give you a reality check. Even after all this, there are still risks. Like market risk, the risk that the entire market will decline. There's company risk, the risk that a particular company will perform poorly. And of course, liquidity risk, the risk that you won't be able to sell your stocks when you want to. These are just a few examples, and it's important to be aware of them. While we're at it, with risk comes reward. And the potential rewards of investing can be significant. When you invest in stocks, you have the opportunity to share in the success of businesses around the world. And over the long term, stocks have consistently proven to be one of the best ways to grow your wealth. So, risks are a normal part of investing. The key is to understand them and learn how to manage them. One way is through diversification. By spreading your investments across a variety of stocks, you can reduce the impact of any one stock performing poorly. Another way is through dollar-cost averaging, which involves investing a fixed amount at regular intervals, regardless of the stock's price. This can help smooth out the highs and lows. Moving on, in the digital age, you're not alone on your investment journey. There are countless tools and resources out there to help you make informed decisions. Let's explore some of them. Number 1, investment apps. These are your go-to platforms for buying and selling stocks. They offer a range of features from real-time stock quotes to portfolio management tools. Some popular ones include eTrade, Robinhood, and Fidelity. Choose one that suits your needs and comfort level. Number 2, financial news sites. Staying updated with financial news is crucial. Websites like Bloomberg, CNBC, and Reuters provide up-to-date news and insights about the market trends. Number 3, stock screeners. These are tools that allow you to filter stocks based on specific criteria like industry, market capitalization, price-to-earnings ratio, and more. Yahoo! Finance and Google Finance offer user-friendly stock screeners. Number 4, investment research platforms. Platforms like Morningstar and Zacks provide in-depth research, ratings, and recommendations on stocks. Number 5, online courses and webinars. Continuous learning is key in the ever-evolving stock market. Websites like Coursera and Udemy offer courses on finance and investing. Number 6, investment books and podcasts. Books offer timeless wisdom on investing. Classics like The Intelligent Investor by Benjamin Graham and A Random Walk Down Wall Street by Burton Malkiel are great places to start. Podcasts like The Motley Fool Money and Invested can also provide valuable insights. Lastly, Number 7. Social investing platforms. Platforms like eToro and StockTwits allow you to connect with other investors, share insights, and learn from each other. So, with all the tools, the information you need is just a click away. But remember, the most powerful tool you have is your brain. So keep learning, stay curious, and don't be afraid to ask questions. Well, that's it for today. A beginner's guide to investing in stocks. If you enjoyed the info in this video, we'd love to hear from you. What's your favorite investment strategy? Any takeaway from this video, or any tips and experiences of your own that you'd like to share? Drop your comments below. And if there's any topic you'd like us to cover in future videos, let us know that too. Before you go, don't forget to check out our video on compounding your way to wealth and strategies for major financial growth. Make sure you hit that subscribe button and press the bell icon. Thanks for watching.